Savola, the kingdom's staples group, oils, sugar, pasta, and the Panda supermarkets, listed as 2050. In 2025, the first clean year after the restructuring, revenue rose to 26 billion, 81 million reals. Net income came to 882 million. The balance sheet is rebuilt. Now the margin must follow. This is the complete CFO and business report. Three signals stand out. First, 26 billion reals of revenue earns just 3.4%. Staples are a pricing game. Second, the balance sheet is fixed, mostly. Net debt fell from 11 billion to under 5, but interest cover is only 2.2 times. Third, Panda is the swing factor. Its like-for-like recovery decides the re-rating. The plan runs 6 actions on one road: revenue management on every staple, localized sourcing in Egypt and Turkey, an operational excellence wave, portfolio prune toward high-return foods, debt termed out with covenant buffer, and digital retail at Panda, sequence from 2026 to 2030. Each action has a gate before the next. The SWOT is honest. The strengths: category leadership in oils and sugar and a kingdom-wide grocery footprint. The weak points: thin margins, thin cover, and currency exposure in Egypt and Turkey. The opportunities: revenue management, the Panda turnaround, and the dividend path. The threats: commodity spikes, the grocery price war, and price controls. Michael Porter's 5 forces drawn on staples and retail. Supplier power sits in world commodity markets. Buyer power is meaningful from chains and value-hunting shoppers. New entrants face brands and plants. Substitutes grow through private label, including on Panda's own shelves. Rivalry is high. Staples compete on price. Brands defend the pantry. The model is a chain. Source palm, soy, raw sugar, and durum from world markets. Process in oils, sugar, and pasta plants across 3 countries. Then the brand link. Afia, USE, and Ba Yara, the pantry leaders, distribute across the region and sell the weekly shop at Panda. Foods is the scale engine. Panda is the cash wheel. 4 pillars carry the operational plan. The people pillar: store productivity, sourcing, and incentives tied to store-level profit. The technology pillar: pricing science and demand forecasting. The infrastructure pillar: plant debottlenecking and Panda refits over new builds. And the digital core: the Panda app, loyalty, and retail media. Every risk carries a probability, an impact, and a named owner. Commodity inputs are high and high, owned by the CFO and procurement. Egyptian pound and Turkish lira exposure sits with treasury. The grocery price war at Panda is owned by the retail chief executive. That is deliberate. Governance keeps the plan honest. The board sets risk appetite and watches the register. The audit and risk committee owns controls and capex stage gates. Management delivers a monthly KPI pack, a quarterly board review, and an annual plan refresh. The context is Saudi. The Saudi Vision 2030 program lifts consumption, and every new household stocks oils, sugar, and pasta. Egypt and Turkey add growth and currency risk. The grocery price war compresses retail margins while private label grows, and digital grocery opens new margin in apps and retail media. The rial stays pegged at 375. The portfolio drawn product by product. Afia, the cooking oil leader across the region. United Sugar at national scale. Durum pasta lines. Ba Yara snacks and nuts. A stake in the freezer aisle. Panda hypermarkets and supermarkets. 49% of her fee restaurants. And exports across the region. Staples at scale. Peer comparison at live market caps. Savola trades near 8 billion reals. Now the margin contrast. Al-Marai, the very stake this group just distributed, earns nearly 3 times the profit on less revenue. 11.1% net margin against 3.4%. Closing even part of that gap is the whole equity case. Valuation with every assumption on screen. Risk-free 4.45. Saudi equity premium 5.01. Adjusted beta 0.95. The WACC lands at 7.9%. The plan discounts to 61.4 reals per share. The market says 26.92. Read the grid, not one number. No buy, sell, or hold verdict ever. 5 catalysts to watch. Pricing power rebuilt through revenue management in 2026. The Panda turn with loyalty and retail media. Leverage clearing 2 times by 2028. Dividends rebuilding as covenants ease. And by 2030, EBITDA margin at 9.5%. One grid, 10 years. Actuals in green, plan in blue. Revenue climbs from 24,669 million to a planned 31,883 million reals. Earnings per share builds toward 4.11. 2024 is shown for what it was, a one-off year. Labeled illustrative on every panel. 5 years in one picture. Revenue held its scale near 26 billion reals through a full restructuring. Margins stayed thin, near 3%, with 2024 shown for what it was, a one-off year. The share held its ground through a 6 billion rights issue from 23.50 to 26.92. The clean story starts now. 2 pictures explain the reset. Bridge the operating line, not the one-off. Gross profit held, while cost lines and the retail reset took 555 million reals. And the cash picture is healthier than the profit line. Operating cash of 1.2 billion covers investment twice over. Deleveraging eats the rest. For now. The transformation map is a road. 2026, Foods margin rebuilt. 2027, Panda turns for good. 2028, leverage below 2 times. 2029, dividends flow again. 2030, margin at 9.5%. One road, 5 gates. 9 numbers hold the budget up. Growth of 3.5 to 4.5% a year. Gross margin walking from 19.7 to 20.6%. Capital spending at 3.2% of revenue, easing to 3.8. Zakat and tax near 15%. And a payout near 40%. The balanced scorecard makes it accountable. EBITDA margin, 9.5% by 2030, owned by finance. Panda like-for-like sales, positive every year, owned by the retail chief. Interest cover above 3.5 times, owned by treasury. Every target has a cadence and a name. The 5-year plan, in numbers, revenue builds from 27,124 million to 31,883 million reals. EBITDA recovers to 9.5%. Earnings per share reaches 4.11. Dividends rebuild toward 1 real 75. All of it labeled illustrative, not guidance. The master budget allocates 2027, month by month. Ramadan begins on February 8th, and the pantry fills first. Oils, sugar, and the Big Panda shop peak in February and March. December closes high on year-end promotions. 12 months waited the way the kingdom stocks its kitchens. 3 final charts close the budget. The Ramadan quarter leads the phasing. Of every 100 halalas of budget, cost of goods takes 80. And EBITDA keeps 8.9. Firm cash compounds to 6,477 million reals across the plan. The complete Savola report is live at cfoinb.com. That is, CFOINB.